This is exciting.
Hi, thank you for joining me.
It's a pleasure to be here. Thank you for having me.
So we are here with Charvi Kennedy, and today we're talking about credit. So tell us a little bit about yourself and your company, what you do.
Absolutely. Well, again, thank you, Kristen, for having me. I am Charvi Kennedy. I am a Spelman graduate. I'm a wife, mother of 6, and an advocate for literacy, both reading and financial. So in financial literacy, I am licensed to sell insurance, which is life and health. I'm working on my property and casualties license. That will be in a couple of months. I am currently studying for my Series 6 and 63 license. That means that I will be able to trade in stock professionally like a stockbroker. That's what that's what their license are. And I am certified in credit repair as well. So what that means is I assist people and I have the right to help them understand credit. I can be able to, with the software I have, pull up their financial report. I don't necessarily see their score. The score is still seen by the persons who have the right to see their score. But I can pull up their report. We could take a look at what's their circumstances. And it also means that I am proficient in the Fair Credit Reporting Act, meaning that I've read it, I understood it, and that I can be able to explain it to others in order for them to better understand it. So with that, my company is called Ascension Consultant Enterprises, because ascension means to ascend in regards to progressing. And because of the multiple businesses that I work with, when I deal with credit, I work with a company called United Credit Education Services. So in regards to my personal involvement, I have the knowledge to be able to sell products that assist people in the concept of credit, which is budgeting, understanding your net worth and your debt payoff strategy to get some of that debt off. I've been doing this totality for about 6 years and in licensed in life and health for 6 years. It's these new ventures that's helping me with advancing my skill set in order to help more people. So I've been doing that for 6 years, and I've been associated with United Credit Education Services specifically for 2 years.
Okay, perfect. So in a nutshell, like, what is credit? What is it?
Credit can be complicated. And I start with just the definition of credit. You know, there's about 10 to 12 definitions just in general. A credit, if you in school, right, that can mean a credit towards getting your degree. It can be a credit when you break it down financially. There's 3 ways to determine credit. Well, in the way I specifically deal with credit, is the simple definition of your financial and commercial trustworthiness. So what does that mean? It means that it's your financial reputation. We have a characteristic reputation where we may know someone to be a nice person, another person to be not the best with handling things, like they're probably what people call mean. So credit is where you're able to have the ability to have your finances on paper and they are judged. So it also means your understanding and the usage of money, where what does your money say about you? If we, the company, do this for you, such as give you a loan for a home, give you a loan for a car, give you something tangible, then the relationship is, what will you do back? Will you pay it back? Will you not pay it back? Will you pay it late? Can we depend on you to give your money back? So it is the equation of how can we determine if we give you this funds or tangible item, what can you do to ensure that you can give it back to us? So that's your credit rating. That's what credit is.
Yeah, so that's good, leading to my next question. So your credit score, people always hear the term credit score. Yes. Why is that important?
Credit's important because, again, it's if you think about dating, I relate many things to dating because you get to know the person, you know, before you make a major commitment. And when you're dealing with credit, it is where your money is involved, and you don't wear money. You don't, people are not talking about money. And unfortunately, people lie about money. And in the past, history have shown us different ways to use money, whether we barter or we exchange one item for another item in regards to trade. Credit is an energy. It is, if it's a positive relationship where if I'm telling you I'm going to do this and you're going to do that, we can continue to build that relationship, just like dating. So credit's important because it's your dating history with your money. And if you and a company have a great relationship, they will always give you money because they know you're going to give it back, or they know your circumstances. So it's not about a $1 interaction. It's about an energy that's surrounded by currency and what's your relationship with the specific company. So, for example, if you have a great habit of buying and selling cars, but you may not have the best relationship with credit cards, well, there's an industry you can still have a relationship with, and they will always allow you to get a car. They say, hey, they're going to look at your credit report and say, they may not do these things, but they pay off cars.
They pay for their car. They don't pay their their gas bill, but they do it.
Right. They're not going to pay their water bill, but they're going to pay this car bill. So yeah, they have a 475, or they have X whatever it is, but it's the number that's important, and it's the relationship that's important. So it's a two-part relationship when you're dealing with credit. That's why it's important. Can a company trust you? And that is important, just like can a person trust you?
Okay. Good. So what are some, you think, like major misconceptions that people have about credit?
We think that credit is we can hurry up and fix it and deal with it immediately. Anything that has to do with credit is longevity. It's an investment. It's an investment in yourself and in your habits. So we see many, I could change your credit in a day, in 14 days, even up to 30 days. And these things that make it seem as though credit is something real easy to deal with. It is when you put the work into it. So the misconception is that this is just, something to deal with quickly. If I need a goal to happen, then I can find ways to manipulate that, or I can do what I can to boost, quote unquote, said credit score. And if you look at it from that way, you're really not building those habits that are needed in order for you to have a sustained credit history or a sustained credit score. Your score fluctuating, that's not doing anything for you as a consumer. So that's a misconception that this credit is a easy 30-day, 10-day process. It's part of your life. So it's like changing your personal character, because it's your personal relationship with money or the way that you're interacting with currency. And that takes more time. People don't even change with their habits, and money is a habit.
Okay, awesome. So another thing is, what makes up your credit score? I know when we do, Charvi's done quite a few home buyer seminars with us. And one of the things that people are kind of wowed by is like looking at the wheel and finding out what makes up your actual credit score. So can you kind of go into a little detail about that?
Absolutely, because again, it doesn't mean that it determines a specific credit score. Those are habits. So those percentages are habits and what you've done over time to deal with your credit. So in this wheel, you have the largest portion, which is 35%. Oh, well, the wheel 100%. So when you break it down to 35%, it's your payment history. How consistent are you with paying your bills? And keep in mind, the payment history is the probability of you paying in a 90-day period over 2 years. Okay. So when I break that down, that means that 35% actually consists of 2 years worth of prediction of what your payment history will be. What I mean by payment history is, are you going to pay in 90 days or less within 2 years? So again, it's a formula that's used that's projecting a 2-year future in that 35%. What's the likelihood of you paying a bill on time in 2 years? That's where it comes in. So that's why when you pay a bill and it's been 90 days or 120 days, you don't see that effect, because that's not going to put a dent in anything for 2 years. That's why I go back and say a misconception about credit is that you could change it in 30 days. It takes at least 30 to 60 days in order for things to show a change in your credit. Okay. That's the most important part, that 35%.
Okay.
Then you have the 30%, which is the amount that you owe compared to the debt that you have. So if American Express give you a $1,000 credit limit, they want you to use 30% or less of what the card holds, which in this case would be $300, the 30%. So
Okay.
they want you to have consistency with showing that you're disciplined, that you're
Right.
not overspending. So that's what that 30% is. So add up all of your debt. And if it's less than 30%, your credit score will be at an increase because that shows habits. Again, discipline. Right. That's the 30% with the discipline. So 35% payment history, 30% the amount owed. That's a huge chunk right there, 65%, right? So then you have 15%, which is your frequency. And no, I'm sorry, it's your, what's that 15%? Let me go down to 10% right quick. 10% is your credit utilization. So what that means is the new amounts that are open. I'm sorry, 35% payment history, 30% amount owed, 10% new line of credit. So
Okay.
new line of credit. So this is credit cards that you're frequently opening, or if you go to a dealership and they're putting your credit out there in order to see which lender is going to take you. If you have too many of those are going to develop inquiries, and inquiries one at a time, two at a time won't do too much. But if they're 10, 15, 20, and they're seeing this at their credit score, that shows desperation. So that's right. That 10% that if you keep showing that frequency. The another 10% is how long you have had these credit lines open. So again, like a relationship, it tends to be the norm. Normally, the longer you know somebody, the more that you can get out of them in a relationship because you've asked those questions, they've shown those habits. Mm-hmm. A lot of people show misrepresentation in a certain amount of years of who they are. In credit, it's the same thing. You know, have you built those habits over what tends to be about 7 years to take a look at what's been your consistency over 7 years? Oh, and then that 15%. Oh, is 15%. Oh, the variety. The 15% is the variety of your usage of your credit. So then you have, do you have a car note? Do you have a rent? Do you pay that? House note, credit cards, loans. It wants to show a variety of how you're understanding credit because there's different rules in credits. So that's important too, because how much can you juggle? How financially sound are you? So 10%, 10%, 15%, 30%, 35%. That's the breakdown of your credit score. 35% payment history, 30% is the amount owed, 15% is your variety, which is like a portfolio. 10% is the longevity of your accounts, and another 10% is when you the frequency of you trying to get credit. Are you desperate or are you sustainable?
Okay, I do have like a follow-up question on that. You talked about kind of the 30% on your credit cards. I know a lot of people want to pay off their credit cards to zero. How does that affect your credit score? Is that a good or bad thing?
It's not a bad thing, definitely. You know, if you're paid off a card, that shows that you don't want to deal with that anymore. But with credit, you don't want to pay it off completely because they need to show how you are using it. Credit is a currency. It's a flow. So you have to, again, that example with American Express, $1,000, you use up to 30%, which is $300. So you would need to show that you can balance that $300 over time. That's the longevity of your relationship with that account. So you don't have to pay it off at zero because once it's at zero, it's no longer having any movement. Credit is a flow. So at least keep $100 on there. It's okay to spend $100 on there and then pay off $80 and then do it again the next month, pay it off again, put something on there, pay it off, because it's showing control, it's showing frequency, and it's showing habits. So you do want to make the habit of using a credit card, because when they're giving you these loans, you're showing a habit of paying back. So it's a great thing to use it. Zero, you just won't show any habits. You have to show movement.
Right. Perfect. Perfect. So, what steps can someone take? Like right now, I feel like a lot of people have a lot of time on their hands.
Yeah.
So, what are what are some things they can kind of do now, like little small things that they can do to make some improvements in their credit? Just
Yes.
like a couple of small tips.
It's an exciting time. I know there's some unfortunate situations that are going on. I understand health wise, but right now the world is at a halt. And what that can help with your credit, a small tip, is that you have to look at the money coming in. There's not much that you can do going out right now. And it's not as though you're going somewhere to go to an establishment and you want to be seen, so you're buying new apparel. Or if you are going somewhere, it's not going to be too far with the city ordinance, so you're saving gas. So right
Yes, Lord. Well, you know me. I'm real estate. I have saved so much money on gas in the past 3 weeks. I was like, "Oh Lord, it's all going to groceries, but still."
and the gas is going down. So it's like, even if
Yeah.
you're going somewhere, it's not too much that you're putting out. So now
Right.
is the time where it's not so much going on that you can look at your money. We don't understand the power of budgeting, and the power of budget is discipline with your money. Because if your money's just here, there, everywhere, you're allowing it to control you. A budget is where
Right.
you control your money. Money is going to move. If it sits in one place, it's not of service to you or the money. It's like a child. It has to be in use. It's like a soldier. You have to put it to war, and the war is against the economy. So I say that to say, it's very important with credit to budget that money. What is your money doing coming in, and what is the importance of it going out? So once you get that, you can put aside X amount of dollars or certain amount of percentages in order to deal with your credit, in order to attack it. So something as small as what money is coming in, how is it going out, and then how can you shift those perspectives? So the budget thought process is 50% of all of your expenses in regards to your home, car note, anything that has to deal with your standard day-to-day living, lights, utility, everything. Because if it's way above 50%, there's some means there that we need to work on, but that's a whole nother subject. But it's supposed to be where your expenses are only taking 50% of your income. You have 30% to yourself. You can do whatever you want with that 30%. And then 20% is towards savings. So you can start building in your credit, and because that is a day-to-day life situation, and start forming habits with that 50% and having credit into it. So before I talk to people about money, about $1, $2, we're talking about habits. We're talking about discipline, and we're talking about consistency, because that's what credit is before it's a dollar. So if you're not consistent, or if you're not disciplined, credit is going to be a challenge to work on. And it doesn't have to be. It's all a mindset. So that's the tip. The tip is budgeting right now, seriously. And then after that, it's other layers. But get that budgeting taken care of for about 30 to 60 days to just be aware of where your money is coming in, where is it going out, and where you can make adjustments to put $1 towards something that has to do with credit.
Yeah, and that's one of the first things that we've been doing as a business owners, is looking at our expenses, because that's pretty much the one thing that you can kind of control. So we've already cut some expenses already, and plan to eventually move it into some other cuts. But yeah, so one of the kind of goodie items that we'll attach to the video, in addition to your contact information and website about your services, is a budget sheet that we like to give our clients. So that's kind of, as she said, this is step one. Do you have a budget? If not, I know it can be scary, but let's deal with the truth. Let's
Right.
trust me, I know it's scary.
Yeah.
But let's just take a look, and once you kind of see where you are, let the chips fall where they may, and then you can actually make a plan. And the budget is just, a plan.
That's it. If you don't have a plan, there's not going to be much that you can do after that. You're winging it. And you can't wing money. Money's already set. It was here, again, the system before you was even born. So the best thing to do is to get on board, to understand how it works. And how you understand how it works is starting with your own money. How is it coming in? How is it going out? That's the first step of credit, actually, just to understand the flow of money. So yeah, we've been there. That budgeting sheet is like in the mirror. You're gonna be like, oh, yes, okay, this is real,
real.
What you're gonna do about it? Because there's no something that's gonna come down here and save the world about your money.
Awesome. So again, thank you, Charvi, for joining us. This is awesome.
Such a pleasure. May I add something just right quick? Because
absolutely,
because credit, it's something going on every single day about it. So right now, another important time right now, outside of a tip, is that it's going to be critical, Kristen, in these next 3 to 6 months about what's going to happen with this money that's coming in for persons in regards to the stimulus checks and the federal grants with small business owners, whatever. Even if there's not any money that people qualify for, unemployment, I hate to say people can qualify for that due to furloughs or no longer working at a job. There's going to be some reconstructing, and we're living in history right now. We get to tell the tale and be ahead of the curve, different from the 2008 with what happened in the financial industry in regards to the homes. And now we can get ahead of that because it's just the habits of where are you putting your money. This is the time is a lot of people want to put it in stocks, and it's like a car engine. If you're not a mechanic, you're not going to go and put a new transmission in your car. The stock stuff is great, but I'm saying it's like, I'll put this there and put that there. And I'm just going, it's so many layers to that, but it can all go back to the simplicity of, in these next 3 to 6 months, this could be a very profound area for your credit, because the credit bureaus, they're not changing their habits. The credit bureaus are the reporting agencies. They are not, if you call them, which you really can't, or if you text them or email them, whatever it is that you're corresponding with them, they're not doing anything to change anything about how anything is going. Not Experian, TransUnion, or Equifax. The important parts are who, again, look at your budget. Who are you paying? Not just what are you paying. Now it's an important time to know, who are you working with? If you have a mortgage, will it be X company? If you have a car, will it be Toyota Financials? We're going to start learning more about these companies and seeing how strong they are. There's a site for your team. It's called Experian. Well, Experian.com has a special section that it lists these companies such as American Express, Wells Fargo. Kristen, if I can get it to you as soon as I can, I will. Which I was going to be
perfect. I can also post that as well.
Please do, because this is the link where if you have a relationship with these companies, they're doing some changes to assist with the relief. It's called credit and debt relief. So, for example, Hyundai has it where you don't necessarily, you have to speak to them, though, and talk to them about the circumstances, because you can go 2 months without having to pay your bill if you have a car that's leased under Hyundai, or if you purchased it and it goes through the Hyundai company, and it's going towards the latter part of your term versus right this second, because they understand what happens. So I'm saying all of that to say that there's all these companies that when you're looking at your budget and you're going, I pay these people, I pay those people, talk with them to see what they're doing in order to put a hold, deferment, or ceasing, whatever they're doing to assist with this travesty that we're working in right now, because they know people are losing jobs. But people who are working on your credit or in your budgeting, this will be that time, because you can restructure and start building great habits in a time of turmoil, so you know how to stand strong. That's what the companies are doing, these major corporations. That's why American Express is still going to be there. Target is still going to be there, because like Kristen, you said, they are cutting back expenses. They're doing the same thing that I'm telling you to do.
Yeah, we're personally doing,
that's why they're able to help their consumer, and it's customer service. So when I'm looking at Hyundai, which I thought was amazing, they don't technically have to do that because, you know, we're supposed to be conscious consumers, but the fact that they're able to do that, that shows longevity and innovation in a time of turmoil. So let's take advantage of this time that these companies aren't going to be hounding us about our credit, or they're going to bother us too much about our circumstances financially. They're giving us some time to get together. So if it's a better time to get your credit going, I always say it's now more than later, but I'm saying the companies are dealing with this now. 3 to 6 months, we got a lot of work to do. And I would love to possibly assist you, Kristen, or your team or whoever. That's what I'm here for. So I just wanted to give that little tip about what just happened.
Thank you.
Thank
All
you.
righty. Again, all of the information that we discussed, the links will be attached to the video. So thank you again, Charvi. Have a good one.
Take care. Bye-bye.